Good afternoon, guys. How are we doing today? I'm going to be going over the Nano Dimension earnings. I've already taken a small look at it. Nothing too crazy. And it's not looking great, but it's also not looking too bad. So I'm going to give both sides of it here. And hopefully you guys enjoy. Let me get this here on my end of things. Alright, I think I got it all set here. Let me just share the link. Alright, let's go through this now. Alright, I'm looking at Nano Dimension. The consolidated results incorporate the financial position and performance of Markforged from the acquisition date of 16 million gross profit. This is going over all that. Second quarter results. Revenue of 26 million, a 72% increase from 15 million year over year. Gross margin 27.3%, down 44.7% year over year. Adjusted gross margin 44%, down 46.1% year over year. Adjusted EBITDA 16.7 million. Net loss from continuing operations 11 million. One thing I want to look at is the cash position. Oh, there we go. As I said, the cash position as of August 31st, including Markforged, 520 million. That's actually not bad. I thought it was supposed to be more in the range of 350 to 450 because of the other issues they had going on. But that is actually pretty good. And the conference call
reflects the cash considerations paid for the acquisitions of Desktop Metal and Markforged, totaling approximately 179.3 million and 115.1 million, respectively. This substantial liquidity provides us with the flexibility to pursue strategic options from a position of strength. As of August 31st, our cash equivalents, and investable securities for Nano Dimension, including Markforged, totaled over 520 million. This does not include any amounts related to Desktop Metal. I will now hand it back to Dave.
Thanks, Asaf. Nano Dimension offers a market-leading mix of products and solutions that address today's needs, along with programs that have the potential to deliver significant value in the future. We are advancing digital manufacturing by delivering needed and innovative solutions to customers with precision, performance, and flexibility. We're also building the capability to deliver these solutions at scale to address challenges that previously have been unsolved. We've taken deliberate and needed steps to strengthen our business strategically, operationally, and financially. We've sharpened our focus on high-value technologies and opportunities, and we remain focused and disciplined in our capital allocation and continue to refine our strategy to build a strong foundation for growth. Our mission remains clear. We aim to lead the future of advanced digital manufacturing. With our differentiated technology platforms, our strong balance sheet, and focused execution, we're positioned to create long-term value for our customers and our shareholders. I'm excited by the opportunities ahead, and I'm committed to executing our strategy with focused teamwork, discipline, and transparency. Thank you, and we're now ready to take your questions.
Thank you. We will now begin the question and answer session. To ask a question, you may press star then one on your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. If at any time your question has been addressed,
when will serious profits be made?
Please press star then two.
And when will the cash actually be used properly? I always thought it was the CEO problem, and then we got a new CEO, and we got.
Again, to ask a question, please press star, then one.
No questions. There's probably no analysts anymore. I remember when this was like 4 years ago. Everyone was saying, oh, this is going to be the next big stock. If you get in now, you're going to be a millionaire. In about 5 years. Let me check the watch. We're at about 5 years now. And I'm definitely still not a millionaire. And I think this might be a decent time to buy back in, but it's a shame how low
our question and answer
this
session.
Company's gone.
I would like to turn the conference back over to Dave for any closing remarks.
No
questions.
Go
ahead, sir.
Thank you very much. And as I said, we're excited about where we're going. There's a lot of work to still be done. We've accomplished a lot and taken away a lot of roadblocks that have been in our path for the last quarter or two, but excited very much about the market segments that we're focused on. So thank you for your time and hope to speak to you again in the future. Good night.
The conference is now concluded. Thank you for attending today's presentation.
Shame.
You may now disconnect.
That might be one of the worst earnings calls I've ever seen. And then they gotta play this music again. That sounds like I'm about to go to war. Oh my god. That was miserable. There was nothing worthwhile there. Realistically, if we're looking at everything across the board, it was just a huge nothing burger. And as an investor here, you got to be used to that a little bit. But it definitely does suck to see that they still haven't found a way to make any of this stuff work at scale and show proof of concept. The one thing I will say is that the only considerable thing is the Mark Forge results of 16 million was nice to see, and the cash being 520 million was nice. Other than that, there was nothing really memorable here except for the revenue jumping year over year, but that's mainly due to the, as I said, the contribution of Mark Forged. So if we're looking at it realistically, this was an overall just loss. And the one thing is, it's starting to stabilize. Obviously, it was coming from a high stock price, and it was never meant to be at $8 a share. But even now, I still think it might have a way to go down at $1.45, especially after today. There was no real sense of urgency, sense of care for the investors in the call. It seemed just like they just wanted to get it over with, kinda. There was nothing new brought to the table, no guidances really for the future. There was nothing really memorable about what they were saying. The one thing I will say is that I do like that they've maintained the liquidity, and even though cash is down, they still have a large cash pile. And their new acquisitions have brought in the product and customer base. But other than that, there's nothing much to really look forward to, as the gross margin fell a lot. Um, Even the adjusted gross margin dropped slightly. And if I'm looking at it correctly here, there was big losses from discontinued operations of 140 million, which is, you can't be having that as a big company, especially if you want to continue to grow and expand. It's just going to be tough for them to grow in the future if the improvement is continuing on the operational level. You can't have these big losses stacking up and stacking up, especially for a company. I don't even know what the market cap is of Nano Dimension. Let me look it up. Um, Market cap. The market cap is 320 million. That's insane. I remember when it was so much higher when I first started investing in Nano Dimension. And it's really a shame how far it's came down, because the cash is just going to keep getting driven down, and there is the revenue growth that you can absorb to the acquisitions and they're continuing the operations, but with so many liabilities, and I know they what was it, the desktop metal, they have such a big runway on that. With there's going to be, over time, you're going to watch margin erosion happen, as well as the high operating expenses, the risk that the discontinued operations drag price down to a point where this company may be hard to another step in from here. And I think, obviously, you're asking yourself, how much lower can it really go? It's already at $1.45. It's coming down from, what was it, all-time highs of, if I'm looking at it unadjusted, $90 a share. You're thinking, how much lower can it go? And I'm thinking you got to look forward to strategic alternatives. That's what this call was bad, because they had no alternatives. They had no real timelines. There's no restructuring, no spin-off. There's nothing included in here that could jump out at you as an improvement, as margins are getting better. There's less cash being thrown out, and the guidance was really lackluster on this call overall. So in my opinion, I would stick away from it for now. I would keep an eye on it still, of course, as we've been doing for years. You got to keep an eye on Nano Dimension. That's one thing that I will always say, because there's a lot of potential here, and I think we all know that. And as the losses are narrowing and the revenue is starting to go up year over year, they could have they're going to continue to rise up in share price. But it's tough to see this, because they're not really good at communicating with the shareholders, and they have a big shareholder community here. And I've seen it growing since this was one of the first stocks I saw when I started investing during COVID times. And it's insane for them to give this little care for the shareholders, as well as even I would say the company, at a point where you're expecting to see the company start to make big progress and all, and they come on a call, speak for maybe 20 minutes, and give no guidance. There's no analyst questions, no nothing, and then they just get off, and they expect us to be happy. There's no way you can expect something like that, and it's tough, because I should have called in a question, I feel like, almost, because I had a question, but I was expecting someone else to maybe call something in, and there just hasn't been any transparency by the CEOs or anything, even though I know a lot of people that have been sending them mails and all that stuff. So it's tough to see. I'm really disappointed in Nano Dimension today. If anyone's in the chat, I'd love to hear your thoughts on it. Um, I'm definitely disappointed seeing all that happen, especially considering the expectations going into today. I'm not going to say I was setting them very high, but I also wasn't expecting such a dramatic drop, if that makes sense. I was expecting something else along the lines of, we have this going on, we're planning on doing this, that acquisition has helped us do this, blank, 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 fill in the blanks. And I didn't really get much of that at all on the call today. So it's very disappointing to see. Let me go into here. Let me look at what other stocks are. Ooh, this stock has
Right
an
after
earnings
we
call.
would deploy for them
Let me
in North
watch
Carolina.
this.
So it was contingent on a North Carolina deployment. So these things take a little bit of time to close.
Watch this.
Redoing technical plans and financial contracts when the capacity changes on such a high level just take a little bit of extra time to close these
What
contracts. But
stock is
all of
this?
them
WYFI.
are aware. Their timelines are all Q1 2026, and pen to paper
White
needs to be
fiber.
done
What do they
quite
do?
quickly to accomplish that.
I'm not paying market screener.
Greg, any commentary on the aggregate pipeline beyond North Carolina?
Yeah, so we're looking at sites in Arizona, Texas, state of New York. We are looking at another site in North Carolina as well. Given the timelines, these are still in early stages of development. It would be quite difficult for them to work on any potential client that would not get the first phase or the entirety of North Carolina.
I'm just starting to learn about this company
The
here.
prospects that we have for North Carolina are really all looking for a Q1 2026 delivery.
It's probably worth mentioning also, Billy, the pipeline of facilities that you're looking at that are not necessarily marketed as data centers. If you want to unpack that a little bit, I think that might be helpful.
Sure. I mean, I think the fact
Does anyone
that
have any experience
one
with
of
this
the
company?
customers that
It's my
we're
first
speaking
time
with
looking at it.
is looking for us to build for them in another market that we didn't even have on our radar. After we pitched them the North Carolina project, goes to show that how much they value our speed in our retrofit build model, which is quite important in today's times.
And maybe just to add to that, so we do build 2 times faster and 40% cheaper. We have a track record of that. In fact, we're handing over the keys to Cerebras as an example of that in just a few days. You know, we bought that was a mattress factory once upon a time. We took that over, I think it was in April, I believe, Billy, is that correct?
End of April, yeah.
End of April, and we're able to convert that into a tier 3 data center for one of the most demanding hardware clients out there in the world, Cerebras, and those keys are being handed over extremely shortly, in days. And so that's just an example of how we do things very differently from others in this space. And we are winning business because of that track record and because of that ability.
Over the last few months.
Time is extremely expensive for these clients. They don't want to wait around for greenfield builds. And Billy and his team are able to build these things using the retrofit formula while the others are still waiting for the concrete to dry. So it's really important that it's very important for clients, and that is why we're getting a lot of this very enthusiastic business interest because of that particular and formula that we have. And yeah, I just think it's worth mentioning that.
Appreciate it. Thanks, Sam. Thanks, Billy.
And the next question will come from Nick Giles with B. Riley Securities.
Thank you, operator. Good afternoon, everyone. So just wanted to, first follow up on NC1. There seem to be some kind of higher credit quality parties entering the conversations. I mean, do you have a rough deadline in mind of when you'll cut off inquiries? Have you done so already? And then, my main question is really what aspect of the deal is really driving the conversation today? Is this around overall scale, price, timing? Appreciate any additional color there.
Billy, you want to take that one again, and I'll add.
That's a pretty good question, actually,
if I feel necessary.
Sure thing, Nick. So it's a mix of all of those points. Change in technology on one prospective client's end, changes the base of design and changes the base price point. You touched on credit worthiness. A lot of these customers have different grades of credit worthiness in our books, and we are not taking on any new inquiries to this site. So we are actively engaged with a handful of parties right now and just moving along that process.
I mean, I'll just say it's a horse race between three right now, and so we're going to optimize for the best. But go ahead, Billy.
Horse race of 3.
We're still aiming to deliver in Q1, end of Q1
I think this company's pretty good.
So there will be an eventual cutoff point where
Let me start using light mode.
the
I can't see anything.
party that's not as far as long as the others will probably have to drop off.
Very helpful. Just one follow-up on that.
And Nick, just I think you also asked, like, there are some who are trying to upsize the megawatt to take the whole thing. So you wanna ask a more specific question about that? Go ahead.
Exactly, Sam. Yeah, that was really my follow-up. Is just I think you made some comments around the 24 and the 40, and so I was wondering in those conversations if you're having any that could include all 99, and if you could really remind us of what would be required from the energy provider to kind of reach that level. Thanks very much.
Yeah, Billy, you want to take that, and I'll add context if necessary.
Sure. Yeah, so we did have one party initially contract for 20 and then ask for the full 40, and another one asking for the full 99. So there are conversations happening with the utility provider, assurances on timeline for them to deliver for us and for us to deliver to the end user. So that's what's really delayed the process on those two specific cases.
What's going on here?
Got it. Guys, thanks so much for the update. I'll jump back in the queue, but keep up the good work.
Yeah, I just want to also mention, you didn't ask, you sort of touched on it, Nick. I just want to give some more information on with respect to the quality of the counterparties. They are extremely high. They're creditworthy. Of the three, in my personal opinion, there's one in particular that, I mean, they're all very exciting, but we are just trying to optimize for the best counterparty because that has a cascade effect on credit facility and so on. So this is a question of optimizing the best for our situation, and this is a question of weeks and not months. So I just wanted to give some more color on the tension that's happening. These are happy tensions for us. These are champagne problems, but we understand the market is impatient, but we do want to get the very best customer announcement.
Understood, Sam. Thanks again.
And we'll take a question from Brian Dobson with Clear Street.
Thanks very much. Good evening, and congratulations on the successful IPO. So as you're looking at additional data centers, you had mentioned that you might be looking at larger projects or smaller projects. Do you think you can walk us through what the returns on those types of projects might be? Are they roughly similar between large and small? And how would you characterize the different types of clients that are looking for, call it large versus small? Are they, household names, or is there any kind of color you can give us there?
Big Bear.
Billy, you want to take that?
Sure. So the household names are usually for the larger projects, and we tend to balance where we look at next, mostly through customer demand. The smaller ones are still AI-based, AI users, but deploying more of their own private infrastructure. Like the example that I mentioned before for North Carolina, we've got a user speaking for 20 megawatts of North Carolina, but contingent, we deliver them shortly thereafter another 20 megawatts in a market that we were not even looking at. So really based on customer, driven by customer demand and balance of available capital depending on the size of the project, right?
Billy, is it fair to say that the smaller sites are juicier in economics, but less, probably less in stature on the counterparty name. Still well known, but not like elite. But the economics are cheaper with the smaller morsels, as it were, compared to the more bigger sites.
Exactly, and a bit of low-hanging fruit in the short term, but the smaller sites, like part of our due diligence process when selecting these properties are how much power is available now, but a pathway to more power in the future. So even if we were to select a small site right now, it's because the power is available there immediately, but one of the check boxes is there a pathway to more power so we can maximize and squeeze that site as much as possible.
Thanks.
Yeah, thanks very much for that clarity. There's been some very exciting news regarding AI data center demand over the past few weeks. As you're looking out through 2026 and 2027, I guess what gets you most excited about growth in the industry?
Well, we think. Go ahead, Deli. Go ahead.
This industry, the data center industry specifically, it's always been a build it and they will come business up until about a year and a half ago. And that's when the flood of requests, significant inbound requests from prospective AI customers. So, I mean, that's really exciting. And finding the right site for the right customer is also an exciting challenge for us.
I want to add to that. We're slowly getting a reputation in the market for, again, establishing this track record of building 2 times faster and 40% cheaper using this very specialized approach that we have. A lot of these facilities that Billy and their team and his team are looking at are not even marketed as data centers. So we're able to get these facilities for not the premium that is normally charged when they're marketed as data centers. And once Billy and his team gets his hands on these facilities, they're able to convert that into tier 3 data centers, just like that mattress factory that is now a tier 3 data center for Cerebras, with revenue recognition, I think, happening next month. That's just another example. But Billy and his team has been doing this for many, many years before we acquired them last October. And that's why that acquisition was very strategic. But what excites me is that a lot of people are starting to now understand that greenfield builds have massive execution risk, and the retrofit model that is only possible through many years of experience of trial and error of a proven approach in doing this successfully. People are realizing that white fiber is the answer for that, because time is of the essence, and time is not the friend of technology. You have to get these technologies online to extract value. And so they see that the retrofit model being 2 times faster with a track record of that, they see that that has a lot of value, and they come to us. So that excites me about that reputation going around the market. And we're seeing that in action already.
Yeah, thanks. That's great color. You should put 2x faster and 40% cheaper on a hat and wear it around. Thanks a lot.
That's actually a great idea, Cam.
That's not bad.
Let's make sure we get hats for that.
And our next question will come from George Sutton with Craig-Hallum.
Thank you. I wondered if you could talk about the contract requirements that didn't meet your needs at Montreal 2. I mean, are we talking as simple as price, or is there something else to be aware of?
Yeah, George, Ben Lamson here. Honestly, go ahead. Go ahead. So yeah, it was a combination of price and term, but predominantly term. As we've discussed in the roadshow, we're really focused on private cloud deployments and on-prem as a service, and identifying customers that can't and won't put their workloads in the public cloud. And for these shorter-term customers or shorter-term contracts, if we wanted to pursue those, we'd really just be pursuing being another public cloud, which is not the arena that we see the biggest opportunity in.
Gotcha. And relative to then the 700 GPUs that are not under contract, I'm curious, are you marketing that as a single deal? Are you prepared to move to an on-demand service offering if not?
Yeah, great question. Yeah. So it's a mix of both. They're not in a single cluster. They're across a few different clusters. They're scattered. So some of those are actually getting put on demand. We're excited about some opportunities we have there with some partners, and then some of them are we've got some long-term contracts in the pipeline for a large chunk of those as well. So it'll be a blend, and we don't suspect that we will have that much free capacity for long.
Gotcha. One other question, if I could, for Billy. So hypothetically, if you get this customer that wanted the 20 megawatts in North
Carolina, I think everything's looking good on that end of things.
find
this might
the
be a
site
stock
and
that a lot of
then
people
develop
should be
out
getting
the site
in
and go
on.
through
I'll
the
have to do more research after
regulatory
the stream
process, or just walk
before
through
I recommend it, but everything I've
kind of
heard
that
so far has
dynamic
been
if
pretty
that
good.
ends up being the deal you take.
Sure. We work hand in hand with the customer on selecting the site in this specific scenario. So we would do our due diligence and make sure that the site meets all of our requirements. Then the client would sign off on the site, and once they're contracted, I mean, part of our KYC with the client is a really deep credit check, security guarantees, OEM backstops. So and we wouldn't go into a market that we didn't think we could expand into. So initial phase would be 20 megawatts, and then we would work on expansion with whichever utility provider would be in the area, and make sure that we can expand and either help this customer grow into that facility or find other customers to fill the remaining capacity that we would get.
I don't know why the stock's down after hours.
Okay, thanks, guys.
Thank you.
And thank you.
Like
and moving on to Paul Golding with Macquarie Capital.
I gotta start my own
Thanks so much. Congratulations on the listing.
Sit around all day.
Wanted to ask on
questions that
the financing that you are already in conversations on with respect to build out and CapEx, funding the CapEx. I wanted to ask, with the deposit, escrow, and other backing that these counterparties have been offering in these negotiations, could you give us some color around how the cost of capital for project financing is developing midway through these conversations? How much is the creditworthiness and these escrow components and other offerings contributing to those conversations with lenders and delivering a more efficient cost of capital model
for your
retro?
I don't know if you can even hear me, but I'm going to get off now for the night. It was nice to look at it wasn't nice to look at Nano Dimension, but it's never really nice. It was, have a great night, be safe, and take care.